oftentimes when a lot of people jump on the bandwagon of something that's new or seemingly new, yes, there are going to be new regulations that arise to make sure that that space is protected. That is all that is taking place right now. It is not a oh snap, I'm not going to be able to invest anymore, or I'm not going to be able to invest anymore in this capacity. It's none of that. The new regulations that are arising, these new topics that are coming about, these new hot topics regarding investing, these things are put in place to keep you safe, to keep us safe, to keep new investors safe, to keep their money safe. That is what we want to do. We don't want to, be on a new venture and then we come to find out, wait a minute, my money is not even protected. So that is what this session is all about. This session is all about protecting the coin, because who got money to be given away? None of us do, right? So if you are in this session, then that means you are here to learn about regulatory differences, risk management as it relates to the differences with Forex and futures, market dynamics and strategies, the tools and platforms that I now use to trade futures, and then a little bit, just a little bit about reporting requirements and compliance in regards to futures. So if this is not the session that you were planning to be on, then hi and welcome, or see you later. But that is what we're diving into in this session. Now, one big thing that came about at the end of last year was a new platform called TradeLocker. And this platform looks very, very, very similar to TradingView, except most of us who are trading with unregulated brokers such as Osprey or Hugo's Way, for example, those platforms were kicked off of MetaTrader 4 and MetaTrader 5. MetaTrader 4 and MetaTrader 5 is owned by a company called MetaQuotes. And I know you guys are familiar with MetaQuotes because once you first create a MetaTrader 4 account, that's one of the first brokers that you're going to see pop up on there, MetaQuotes. And MetaQuotes does not even allow you to trade certain assets. And the reason is because a lot of brokers that we engage with are out of the country, meaning out of the US, because I'm based in the US. When I say out of country, I'm saying out of the US. Okay. A lot of these brokerages are based out of US. And so let's say they are regulated in another country. Let's just say London, for example. A brokerage is regulated in London. That does not mean that they're automatically regulated in the United States. Yes, they are regulated, but not in the United States. And this is where the problem came in at. So TradeLocker swings in to save the day, basically. I have traded on TradeLocker, and I love that the interface is practically the exact same as it is with TradingView. So it doesn't feel like you're using a new platform because it looks the same. However, the bells and the whistles of TradeLocker are not enough to address the issue at its core, such as why are certain brokers being removed from MetaTrader 4 and MetaTrader 5, and now we have to use this particular platform. For those of you guys who are utilizing Osprey as I was, you would have gotten an email like, hey, yep, you can't log into MetaTrader 4 and MetaTrader 5 to trade anymore. You have to trade through TradeLocker. There is not even an interface between the two anymore. It is gone. Within the US, stock indices are not allowed to be traded as far as regulations are concerned. So I had two options. Trade another asset, and y'all know how much I love Dow Jones. I could trade another asset, or I could move around, and I chose the latter. Regulated brokers do exist, such as Forex.com, but within the US, stock indices are not allowed, or they're not regulated, rather. Do we still trade them in some capacity? Yes, they could like TradeLocker. But at the end of the day, if one was shut down for this reason, what would make us think that that's not going to keep happening? This means that while TradeLocker did pull up on the scene, it's just a matter of time before they come crashing down too. And that is the purpose of this session. About 2 years ago, you guys were introduced to proprietary firms, as was I. And so over time, we've seen firms pop up, we've seen them crash. We see more firms pop up, we see them crash. Ultimately, the firm that I was funded through got shut down for that reason. Yes, they're regulated somewhere else, but in the US, they are not. And because they were allowing US clients to trade stock indices, boom, you are gone, okay? You're no longer. That means that every US client that had money, funds, income, whatever you want to call it, investments, sitting in their My Forex Funds account is gone. Okay, it is gone. And you guys will see screenshots and things like that as we continue through this. So this just got me to thinking and just doing a ton of research to make sure that my next move made the absolute most sense, not only for myself, but for you guys and for those who invest with me as well. With all of the research that I did, it led me right back to the same thing that I have taught each of you in the broker section of the course. When there are entities that do not abide by regulatory dispositions, they are bound to have to pay the piper. That's it. Yes, they may have gotten away 15 years, but at the end of the day, a regulation is a regulation. And because investing is becoming more popular, because utilizing proprietary firms to gain the funding is becoming more popular, yes, more regulations are beginning to arise to make sure that the space is kept safe. That's simply what happened. I knew I didn't want to stop investing into US 30 or Dow Jones because I love it. So that meant that I needed to begin investing even more safely than what I had done before. So what you guys see on the screen here on the top left, just for proof of what I'm talking about purposes, on the top left is my contract with my Forex funds. And then on the right is one day I logged into, or I was going to log into my Forex funds account so that I can make sure, hey, today I know what my drawdown limit is. I know my P&L from the last 7 days, so on and so forth. This is the message that I was greeted with. Hey, everything is down. We don't know when it's coming back to life. As soon as we know something, y'all will know something. Well, because I'm invested in this platform every day, what does that mean? Does that mean in 2 days I'm gonna hear something? Does that mean in 6 months I'm going to hear something? Like, what happens? And now you can go to www.myforexfunds.com. That URL is not existing anymore. I knew I did not want to continue to put myself in a position like that. So that, for me, it's time to do the switcheroo. That's just what makes the most sense, going from Forex to futures. Now, for those of you guys who may trade gold, like XAU USD or Euro USD or something like that, you guys are fine. This is for those of us who are trading stock indices on the Forex side and are now having an interest to make sure that our capital is kept safe. Stock indices are regulated within the futures world in the United States. That's it. That's all I care about because I trade Dow Jones. I want to make sure that what I am doing is safe. I want to make sure that my income is safe from this. The CFTC, which you guys already know about this, within the broker section of the course, is the main regulatory body for futures within the United States. Now, I put the link to this site on here. I'll click it, go to it just to give you guys a refresher so that you know what to look like. But the main thing that is on this screen is CME Group. CME Group makes it simple in order for you guys to know, hey, on the Forex side, the Dow Jones Industrial Average was US 30. But what is it called on the future side so that my chart can look the exact same? So we're going to actually go to CME Group, and I'm going to show you guys what that looks like so that you can have an idea. You'll be able to go to CME Group on your own because not all of you may be trading Dow Jones. Some of you may be trading NAS 100, so on and so forth, XPS 500. And so I want to show you guys what the website looks like. So this is CME Group. And basically, again, it just makes it very, very simple. Okay, cute cover page, whatever. We don't care about none of that. All right, what you're gonna go to is, as soon as it loads, catch up. It's going so slow. It's going so slow. Come on, catch up, please. Come. There we go. Okay, so you're gonna hover over markets, click on markets. And we're going to browse by equity index. Okay, stock index, equity index, same thing. You're going to browse by equity index. You're going to keep scrolling until you see the asset that you are used to trading. So if you traded S&P 500, boom, here you go, S&P. If you traded NAS 100, boom, here you go, the NASDAQ. If you traded, there it is, Dow Jones, then boom. Here we go with the Dow. On the right are the 3 futures contracts associated with the Dow Jones. And we're going to talk about contracts and all that stuff. Here are the 3 futures contracts associated with the Dow Jones. E-mini Dow, micro E-mini, and then Dow Jones Real Estate. Each one of these get bigger and bigger. Okay, each one gets bigger and bigger. Micro E-mini, smaller than the E-mini, so on and so forth. We're going to dive into this. The big difference in trading futures as opposed to Forex. With Forex, I have to choose a lot size, okay? 0.01 per every $100 is the standard. Make sure you don't over leverage, right? When you are trading futures, that number is set, okay? So there are no lot sizes. There are contracts, all right? So once you get to this page, like I've already clicked on E-mini, Dow Jones, Industrial Average, okay? Whereas on TradingView, I would search US 30. Here on TradingView, I would search YMH4. That's going to take me to the Dow Jones chart. We're actually going to do that just so you guys can see, okay? What I want to do is come to specs. Specs is going to tell me how much is this particular contract worth. This particular contract is worth $5. $5 per every point that the market moves. Okay, so when you are trading on the Forex side, 0.01 is what? $1 per every point that the market moves. On the future side, for this particular futures contract, YMH4, it is worth $5 per every pip that the market moves, okay? Or per every point that the market moves. So if the market has moved, I'm gonna do a little math class. If the market has moved 5 points in profit, how much money have you just made? If the market has moved 5 points in profit, how much money have you just made? If the contract is worth $5 and it has moved 5 pips in profit, how much money have you just made? Dun, 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 dun. Yes, Akila, thank you. You just made $25. You have just made $25. On the Forex side, the market would have had to move more pips, right, in order for you to make that same $25. So not only is it more lucrative on the future side, but it is also more regulated. And that is what we care about, all right? Each one of these is a different contract size, which I think is pretty cool. Each one, different contract size ranging from, it starts at 50 cents, which is 50 cents less than that 0.01 on the Forex side. So you got the 50 cent, you got $5, and then it gets real big when we're talking about Dow Jones Real Estate. Okay, it gets really, 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 really big. You guys will have access to this right here, CME Group. That way you guys can go and look at it. Uh-oh. Can you guys hear me now? Okay, perfect. What I was saying was you guys will have access to CME Group. There will also be a training that breaks down what is happening on this website, why this website is great, how you can best utilize it. There'll be a training specifically entitled CME Group Web Page Breakdown. That's what I'm gonna call it. CME Group Web Page Breakdown. So somebody, if you'll come off of mute and let me know what the last thing was that you heard before it got choppy. That way I can know exactly where to go back to. What was the last thing that you heard?
Katie, the last thing that we heard was that you had got over the price of $25.
All right, perfect. Okay, so I didn't say a whole lot after that. What I said was there are these 3 different contracts and they each equate to something different. So there is no more lot sizes over here. You pick a contract size, that's the contract size that you are for that particular time frame. The smallest one is 50 cents. So that's 50 cents less than a 0.01 on the Forex side. One is 50 cents, the next one is $5. And then it gets real big when we start talking about the Dow Jones real estate. So that is the gist of the CME Group webpage, and it's the exact same for S&P, for NASDAQ, as far as what the specifications are for different contract sizes, okay? All right, so let's keep going. Last thing we talked about was a switcheroo, why I wanted to switch, why that was important. Now we're going to talk about, is it different? Yes, Forex is different from futures. Absolutely. Absolutely. But there's not a huge difference between the two. Trades are entered based on contract size, not lot sizes. Just like I just said, lot sizes are done. We are finished. Okay. We're all the way regulated over here when we're talking about stock indices. Deposits and withdrawals can take place directly from your bank account or your PayPal account. There is no more, I have to go through Bitcoin and funnel my money through Bitcoin, and then let me hope that Bitcoin don't fluctuate too much while I'm doing my transfer. If it fluctuated in my favor, then all right, cool. If it fluctuated against me, then wait a minute. That's not how much money I withdrew. I withdrew $500. Why am I getting $374? Where is the rest? You don't have to worry about any of that when you are trading futures, because it goes from your futures account directly to your bank account or directly to your PayPal account. There is no middleman, okay? That's one of, or a couple of the differences. Some others are you can trade directly from TradingView. Now, we ran into this a lot where I would try to explain to you guys slippage. I would try to explain to you guys the ask and bid prices with your broker. Make sure that you are accounting for those things when you analyze on TradingView, but then take what your analysis is from TradingView and bring it over to MetaTrader 4. For some of you guys, there was a huge stump in the road. You don't even have to worry about that anymore because you can trade directly from TradingView. Meaning, yes, what I've analyzed on TradingView, boom, I enter my trade with exactly what I see on TradingView, not having to think about how different my broker may have it listed. Let me remind you guys, I would say all the time, hey, Walmart and Target both sell Mountain Dew. Walmart may have their Mountain Dew listed at $179. Target, because Target is sometimes Target, they may have their same size Mountain Dew listed at $217. It's the same Mountain Dew though. That's exactly how it is with brokers. Yes, they have these same assets listed, but the pricing could be slightly off. And that is where the ask and bid price comes in that we would always have to account for when we are placing our trades in MetaTrader. We can bypass all of that because now we can trade directly from TradingView. Another thing is, hey, in the broker section of DiaperBag to DuffleBags, I learned about regulated brokers. You absolutely did. Thank you so much for going through your trainings and learning. I really appreciate that. There are regulated brokers, but they do not allow the trading of stock indices. Why? Stock indices are not regulated within the United States. Now, if I just was like, you know what? Forget this. I don't want to learn how to trade futures. I'm finna move to Dubai. Then okay, I don't have to learn how to do that. It's regulated there. It is just within the US that it is not. So let's just dive in a little bit into a couple more detail. A contract is a legal binding agreement. That's the first question. And I don't know why I didn't type this in there. I don't know. But what is a contract? A contract is a legally binding agreement, meaning that contract size stays the same. Just like we saw 50-cent contract, $5 contract, it stays the same. It's not going to be 53 cents. It's not going to be $4.97. The contracts stay the same. Contract sizes are what they are. Once that contract size is set, that is it. If I choose a $5 contract to trade with or to invest with for the Dow Jones, then hey, just like that example I gave, I chose a $5 contract, I'm in profit 5 pips, I made $25. And that's it. If I've only used one contract. Now, let's say I want to double down, okay? Let's say I want to trade with 2 contracts. Here goes some more math, okay? I'm taking y'all back a little bit. If I want to invest with 2 $5 contracts, well, now I got $10. Okay, stay with me. I got $10 now, okay? With my 2 positions, my 2 $5 contracts, if they also move 5 points in profit, Well, now I'm up $50, just like that. So yes, I can have more than one contract that I'm trading with that's going to change the outcome of my trade, win or loss. But the contract size is what the contract size is, and that's just it. Okay. Kind of we went over this before, but I'm going to go into it again. What is the futures market? It allows you and I, investors, to buy and sell contracts. The contract is a legal binding agreement. It is what it is. The price is predetermined. There are no lot size where I'm adjusting how much I want to be in the trade. No, you pick your lot size, and that is how much you are now in the trade. The difference between futures and Forex, the futures market, we trade standard contracts. Again, just reiterating, it is what it is. The price is what it is. The contract size is what it is. And I'm saying these things over and over just to show you guys how simple it really, really, really is. On the Forex side, it is based on speculation, meaning I can adjust how much skin I got in the game. I can adjust. I can say nope, 0.01, or I'm drop a standard on that thing. It's all cause for speculation, which is also what adds to it not being regulated, because it's way more risky that way. With these contracts, once you pick a contract size, and you can go back and forth between the contract size, it's not that you're married to one for forever. You can go back and forth between them. But once you pick one and place your trade with that one, that's it, you're in that trade with that particular contract. You can still set your take profit and your stop loss. You can still modify your trades. You can still take partials. All of those things are the exact same. The biggest difference is lot sizes versus contracts. The next thing, are futures for sure regulated in the United States for stock indices? Yes, absolutely. Absolutely. Futures fall under the CFTC, and they were established in 1974. You guys already know this. If you have done your due diligence and went through the broker section of the course, then you already know that. I know you guys are going to ask, what happens to lot sizes? What happens to MetaTrader 4? Child, them the step kids now. We don't care about them. If you decide to come over to the future side, we don't care about them. We don't need them anymore. You can delete the apps off your phone if you decide to come over to the future side, because we do not need them anymore. We are done. Everything that we are doing is coming from TradingView, which is the platform that you guys are already used to. And some of you probably not have even realized that you were right in the vicinity of trading futures this entire time. So now on the screen, you should see TradingView as it loads. Y'all, I don't know why this is loading so slow today. I probably need to reset the 500 million tabs that I have open. I know y'all only see 2, but it's a million behind there that I have open, and it's probably contributing to this going as slow as it is. But I want to just show you guys very quickly that you have already been in the vicinity of trading futures anyway. All right. You can see it right here: indices, stocks, ETFs, crypto, Forex, futures, bonds. It's always been there. It has always been there. We just gravitated towards the Forex side. Now, we're going to go ahead and put just a little bit more skin in the game. We're going to go ahead and go over to the future side. We're going to go ahead and go all the way over to the regulated side. And that's just how we're going to rock this thing out. So while this loads, I know I've said a mouthful. I know I've given a ton of information. But thus far, do you guys have any questions? If you do have a question, either drop a 1 in the chat, or you can also use the raise your hand feature if you want to come off of mute. Or if you're a shy girly like me, you can just type your question in the chat. So what questions, if any, because you guys might not have any, y'all super duper smart. What questions do you guys have, if any?
You get ready to show us how you execute a trade from TradingView?
Yes and no. Yes, because I'm going to show you what buttons to click. No, because the market is closed.
It's closed, yeah. But I meant like, where do you go and everything?
Yep. So I'm going to log into my demo account. All right. Let's clear this screen off.
Do we have to pay for it, or is it still the free version?
Nope, it's still the free version. Shaylee said, when placing orders, is it kind of like HFX? No, ma'am. It is not. It is not. And yes, you can still use the free version of TradingView. Okay, so you guys see. Remember on CME Group, and the one that I clicked was YMH4. Okay, yeah. Over here for my symbol search, typically we will be on all. Okay, when you first go to TradingView and you're trying to look for, let's say US 30, typically you are over here on all. Okay, so I'm going to type in US 30. Oh, well, I'm on TradeAvate, which we're going to talk about too. It doesn't exist because TradeAvate is for futures, so you're not going to be able to find US 30. Now, if I were to log out of my TradeAvate account, then yes, on under all, that is what you would see. All right, over here with futures, I'm going to type in YMH. Okay, YMH. There's a arrow next to YM, next to E-mini Dow $5 contract for futures. That's the one that I've chosen. That's the one that I was last on, okay? Now, if you guys look down here, it says YMH 2024, March 2024. Let me remind you that we talked about contract, meaning in March 2024, this particular contract is going to expire and another one is going to pop up. And it may say July 2024. That just means that my chart is going to be up to date. Let's not make it complicated. That means that my chart is the most up to date that it can be. That's all that means, okay? So I'm going to click on YMH 2024 for the March 2024 because that is the next time this particular contract will expire. If I am ready to place a trade, what I typically like to do is dock my trade screen to the right, especially when I'm actively trading. I want to dock my trade screen to the right so that it looks like this, okay? Right here where it says units, that is your contract size. How many of these contracts do you want to buy or sell? Okay, think about the example where I said, hey, if I want to double down a little bit, it's a $5 contract. I want 2 of them, boom, $10, right? Okay, let's say I want to put in 2 contracts for a buy position. Now, recall the market is closed. I cannot actually place a trade, okay? Then I'm going to just pick my take profit and my stop loss. What I love about this is you guys can decide, similar to how it was in TradingView, you guys can decide the amount of money or the percentage that you want to risk. You can decide that before you ever place a trade, which is very, very different from TradingView. You would, or not TradingView, very, very different from MetaTrader. You would not have been able to do that in MetaTrader. You pick your lot size and that's it. You can't say, hey, I only want to risk 17% of my account in this particular trade unless you manually computed that on your own. MetaTrader did not have that option. Here you can. So let's say for this trade, hey, I don't want to risk more than $200. Okay, now you guys know how my stop losses and take profits work, but if you are not at that place to where you're like, hey, my stop loss, oh, I shouldn't have pressed enter. My stop loss and my take profit is based around this, then hey, you can set a number. Over here, it's rejecting my trades because the market is closed, so I cannot place a trade. I press enter, not thinking about it, but I cannot place a trade, which is why it says, hey, you know, these orders are rejected. Okay, you can decide, again, what amount of money you want to risk if there's a certain amount of money, and it's going to update your stop loss according to that number. If I pick 175, again, you see it's going to update my stop loss according to that number. If I don't want to risk more than 20% in the trade, again, it's going to update according to whatever that risk is. I don't want to risk more than 20%. Well, that means I cannot risk more than $90 in this one particular trade that I am looking at. Everything else is the same. Just how we would mark up a chart over here, place our market tools, use our long or short position. All of those things are the exact same. We can just now trade directly from TradingView, directly from the screen. We don't now have to say, okay, well, these are the numbers on TradingView. Let me cross match these numbers with my broker. That way I can understand, you know, my ask and my bid price. That way I can maximize my profit, minimize my loss. You don't have to do any of that. It is all on this one screen for you to engage in. So is there some degree of a learning curve? Yes, there is, okay? Because I'm using terminology that you guys have not yet gained a level of familiarity with. I understand that. However, the learning curve is so small, y'all. Like, it is so small because everything is the same except contract and lot size. Everything else is the exact same. The chart is the same. The way that we execute is the same. If you are a limit or stop person, hey, it's right there. It is all the same. We just now have the MetaTrader interface right here in TradingView. We don't have to go anywhere. I don't need the app on my phone, nothing. And if you are somebody who trades on the go, but you still want to place your trades, how, it's very easy to trade on the go with MetaTrader, you want to still be able to do that, you can just download TradingView on your phone, and exactly what you see on the screen is now going to be on my phone. I can do the exact same thing that I'm doing here on my phone. So with that being said, what questions do you guys currently have? I know you probably have some, but don't really know what question to ask. And that's okay, because like I said, there are going to be some foundational trainings that you guys are going to see populate on your dashboard. It's going to dive more into futures. How do we transition? What are the steps that you guys need to take to make that transition if you decide to do so? So if you feel a little overwhelmed right now, that's okay, because again, you guys don't yet have all of these foundational pieces. I just wanted to give you guys some insight as to, hey, what is going on? Where's Katie been? She's been saying all these words and talking about all these things, and I don't know what she's talking about. I see her talking about it on social media, but what in the world? I need to see it. I wanted to bring you guys a level of clarity to, hey, why am I making this switch? What is the relevance of me making the switch? It's been working well before. Why am I changing it now? These are the reasons that I am doing this. So again, with that being said, what questions do you guys have? And you can feel free to unmute yourself as well if you don't want to type it all out.
You had one, and excuse me for sounding ignorant if I do, but how does, for those of us that's trading with a prop firm and they have already eliminated MetaTrader 4, MetaTrader 5, and we're using a web-based platform, how does executing in TradingView like that, I mean, how does that connect with our account, if that even sounds, I mean,
Yes, that makes sense. So for some of them, you're going to have a third party integration, and I'll put this in the community for you guys. Tradeovate is one of them. That's who I use. Tradeovate connects or allows me to trade directly on TradingView with my account. Depending on your broker, if they have already decided, hey, if you are a US-based client, ooh, sorry, you're going to have to hold on a minute until we figure it out. Then we can sit down together and look at the uniqueness of the broker that you already have a relationship with and go from there. But with a lot of prop firms, all US-based clients, it's a no. It's like, hey, either you start trading something else, or if you continue to trade stock indices, then you got to go. So we can sit together and, like I said, look at the uniqueness of the broker that you're with, and then see if there even is an integration from that broker directly to TradingView with some type of third party like Tradeovate. And there are a ton of other ones out there too if Tradeovate doesn't work.
okay, does Tradeovate allow you, I'm just asking, just to be asking, but like if you have different prop firms or whatever, does Tradeovate allow you, if those prop firms allow you to use Tradeovate, do they allow you to like integrate into one account, and then as you're executing in TradingView, you can execute on different on those different accounts in Tradeovate?
Yes and no. So Tradeovate is not a trade copier. That's what it sounds like you're asking. Like, hey, if I have these 5 different accounts, I want to place my trade one time and then execute for me in my 5 accounts. That would be a trade copier. Tradeovate is not a trade copier, but I can't have multiple accounts that I have connected to TradeAvate, and I say, hey, okay, well, for this trade, I want to trade for this particular account. Okay, well, for this trade, I'm going to click my drop down and trade for this particular account. So yes, you can have multiple accounts connected to TradeAvate, but because TradeAvate is not a trade copier, it's not going to copy those trades into all of your accounts for you manually or automatically. You have to do it manually.
Okay.
Are there any other questions that you guys got for me? And I promise you, they're gonna come. They're gonna come along. Our first session together, we're gonna do a back testing session. The first one for the year is gonna be on next Monday, March the 4th at 7:30, and I'm gonna post that on post that in the community for you guys so that you'll have it. And we're gonna be doing all of this stuff together, but it'll be live because the market will be open. And so you'll be able to see, and I'm going to be placing them in my demo account, so it's totally fine that it's out of session. But I just want you guys to be able to see, what do I click? How do I click it? How do I take partials? What do I actually do with this? I need to see it, live. That'll be on March 4th, which is next Monday at 7:30 p.m. Central Standard Time. So if there are no more questions, thank you guys for dropping in, swooping down in on me, taking a listen, seeing how things are changing going forward, because they are, but for good reason. They are changing going forward for good reason, to make sure that our assets are protected, to make sure that you and I as investors are protected, and to make sure that brokers cannot run off with our money. We don't want that, but that is the nature of an unregulated broker. If they do, they do, and there is no case that you have, because you created your account knowing that this broker was unregulated. So we don't want that. We want to keep all of our coins in our pocket, keep them as safe as we possibly can. And currently, because I trade the Dow, trading futures is the way that I can do that. So if there are any other questions, please send those questions into the community. I will answer them in there. And aside from that, I will see you guys live again on March 4th, next Monday at 7:30 p.m. Central Standard Time. Peace.